Are Russian banks causing enormous problems with large European banks? So last week, the European Central Bank, which is the central bank for large European banks, I'm going to screw up the pronunciation here, Russia's Sberbank, closed. So the credit default swaps for large European banks are sending warning signals, and this is going to cause lots of problems if European banks like Deutsche Bank, Credit Suisse, the large French banks, if they have enormous problems with their counterparties. Very similar problems happened in Europe with large European banks during the 2008 financial crisis and also in 2020. What most people do not know, including many financial professionals, is the true amount. And I don't think anyone knows the real amount, but we have estimates of currency swaps. So these are emergency currency swap lines, and a former higher up at the New York Federal Reserve Bank, he actually gave a speech at a Bank of International Settlements party a number of years ago. The article was actually posted on the Bank of International Settlements website, and it was actually covered by the Gold Antitrust Action Committee, or GATA, so it's in their archives if you want to go look at it. And basically it talks about how the Federal Reserve Bank has an ironclad contract with the European Central Bank, with the Bank of England, some of these other larger central banks in the G7 to provide basically unlimited emergency currency swap line contracts. And this is what happened in 2008, 2009. People don't really know about this, or most people don't know about this. A lot of people are in denial when I've tried to bring this up, including many financial professionals. There was a one-time partial audit that Dr. Ron Paul got. I've interviewed Dr. Ron Paul a number of times over the years. You can check the archives of the channel. I've interviewed Dr. Ron Paul about the Federal Reserve audit, about the currency swaps and the secret bailouts. Dr. Ron Paul's number that he got from the one-time partial audit of the Federal Reserve Bank was over 16 trillion in emergency currency swap line bailouts that the Federal Reserve Bank gave out and then waived the loans. So trillions in loans to foreign governments, foreign central banks, foreign private corporations. This is the Federal Reserve Bank picking and choosing winners and losers among governments, foreign central banks, and foreign corporations. We also got more information about the emergency currency swap line bailouts from a 2011 Bloomberg News Freedom of Information Act request. There was over 30,000 documents that were dumped. Bloomberg had to sue the Fed. And so the document dump, the Levy Institute went through some of these documents, thousands of them, and they found over 29 trillion in bailouts, 9 trillion of which went to the European Union and the European Central Bank in only about a year and a half, 2-year span. And the Fed claimed that the currency swaps stopped in 2010. I found proof that the currency swap lines, the emergency currency swap lines and drawdowns by the European Central Bank for hundreds of billions, if not trillions of dollars, continued for years after that. I put an article for patrons with screenshots from a November 2020 Fed financial stability report showing that the European Central Bank was still drawing currency swap lines, I think in 2011, 2013. So this was during the problems with Greece. This was during the problems with the pigs, Portugal, Italy, Ireland, Greece, Spain back then, and then also with Brexit, with the large European banks. A lot of this has to do with derivatives problems. But the problem with Russian banks is that you have their currency is falling so quickly. There is actually, I was shocked to see this amount, but supposedly Russian banks are charging Russian businesses now, I think, a 30% fee to convert Russian rubles into other currencies. So that type of high fee, like a 30% foreign exchange transaction conversion fee, is the type of fee that normally Chinese money launderers charge to get your savings out of mainland China. So that's absolutely exorbitant fee to get it out of there. I put this tweet there from hedge fund manager Cuppy, or Harris Cooperman, and he's talking about the counterparty risk that the large European banks have with Russian banks now because of all the problems in the Russian economy if this continues, because of the currency instability in Russia, and how this counterparty risk could move over then into large European banks. So the Fed has not officially announced emergency currency swap lines have been drawn. The European Central Bank has not announced that official currency swap lines have been drawn. But at some point, if this continues on as the Russian economy gets worse, as the Russian currency, if it tumbles even lower, you could start to see the European Central Bank make public announcements that they're going to have to draw from the emergency currency swap line for the Federal Reserve Bank. And this gives them access to enormous amounts of dollar loans, hundreds of billions or trillions. The Federal Reserve Bank waives those loans, or at least that's been the policy post 2008 financial crisis. The Fed has claimed in the past that the loans are paid back. I don't see any evidence that the European Union and the European Central Bank paid back over 9 trillion in emergency loans. Those were to prevent derivatives failures back then with interest rate swaps. There are hundreds of trillions in interest rate swap derivatives. They are some of the largest over-the-counter derivatives. There is supposedly around a quadrillion in total notional derivatives values, and the majority of those over-the-counter derivatives are on interest rates. So if currencies move, if interest rates move, you could have these large banks that bet on derivatives start to fail with counterparty risk and other problems. So we'll see what happens. It's worth monitoring, but this is something you have to pay attention to. And some of these large European banks like Deutsche Bank, Credit Suisse, the couple large French banks like Societe Generale and some of the others, Credit Agricole, I think is the other one. There might be one or two more. I can't remember all the names offhand. They're counterparties because they have a lot of business with Russian companies and Russian banks. They could start to have enormous problems in the next couple weeks and the next couple months. The longer the Ukraine war, Ukraine crisis with Russia and the sanctions on the Russian economy drag out. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 200 articles and audio podcasts behind the paywall, really in-depth stuff. Some of my stock picks for gold, silver, so precious metal mining companies, royalty and streaming companies, oil companies, natural gas companies, uranium companies. They're doing very, very well. Commodities are in a bull market right now, while the real world has to deal with really bad stagflation, shrinkflation, and shortages. So if you want some type of inflation hedge, you should definitely check that out. That content is exclusive for patrons, all for only $5 a month. At least that's the price now. Maybe I'll make an inflation adjustment to that. I think it is one of the best deals out there, including a big-time winning stock pick and a liquefied natural gas pick. That was one of the top, if not the top performing oil and natural gas stocks listed on a U.S. exchange in the month of February. I picked it out through my contacts in the industry. I spoke with some Texas oil and natural gas contacts. I have quite a few, and they were telling me about the potential for this company. I was researching them for a number of months, looking for a buying opportunity when the stock chart was showing some type of consolidation, and that's when the article came out on February 7th. And there is a lot of in-depth research behind the paywall on a lot of interesting topics about global macro and different commodity sectors, because for a while those were the cheapest sectors, although we'll see what happens in the near future. And again, that's only $5 a month, exclusive for patrons, and over 200 articles and audio podcasts, including 45 new articles and audio podcasts out in just the last 31 weeks. So if I could wrap up this short little video very quickly, there are a lot of red flags coming out of the Russian economy. All these sanctions, the Russian government is threatening to sue the subsidiaries, but this is creating an enormous problem for Russian banks, and problems with Russian banks. The longer this drags out, the worse the problems in the Russian economy gets for large corporations, small businesses, Russian banks. The worse the problems will grow for the large European banks that are counterparties to these large Russian banks and large Russian corporations. So counterparty risk for these large European banks is going to increase. My friends who are looking at Bloomberg terminals are seeing big spikes in credit default swaps for these large European banks. The market is starting to worry. The Russian currency has had an enormous devaluation against the US dollar in just the last couple weeks. I think at one point it was down 70% or almost 70%. I haven't checked on it recently, but that is an enormous devaluation. Not quite as bad as when the Russian ruble collapsed in the 1990s, but still very, very bad, especially in a short amount of time. This seems like coordinated financial warfare with what Western governments and Western corporations are doing against the Russian economy, but European banks could potentially collapse or they might need secret covert bailouts. If you want to learn more about these secret bailouts that the Federal Reserve Bank did in 2008, 2009, and also in 2020, and the 2019 Repo Madness bailout, which was over 10 trillion, I can attach links below the video in the information and description section. But the bottom line here is that there is no transparency whatsoever from the Federal Reserve. The Federal Reserve lies, the Federal Reserve changes the rules, and the Federal Reserve has ironclad emergency currency swap line bailout agreements with a lot of the other G7 central banks, so they can draw on those. They're ironclad contracts. So if they need trillions of dollars to prevent total collapse, the Fed will just credit their accounts for trillions of dollars. They will not have to pay back the money. The European Central Bank did not pay back the 8 trillion or 9 trillion or more in emergency loans that they got in 2008 and 2009 during that financial crisis. This is how messed up the system can be under a debt-based fiat currency system where the Federal Reserve Bank manages a dollar standard and the world reserve currency.